During the last episode, I spent some time talking about oil and the impact on the inflation. This time, I'd like to spend some time talking about what clues does the dollar hold into the direction of the market. So stick with me. My name is Brian Cannon, and welcome to Markets in 5. So I've got a number of charts I want to get to today, so I'm going to blow through these pretty quickly. But before we get going, let's talk about the S&P 500. So during the last Markets in 5, I really talked about the wind up and the importance of watching these zones. And unfortunately, we did break that zone. So we're on very, very high alert right now. So we did raise a little bit of cash, and but there's three likely scenarios I think will happen. It'll either waterfall down, we'll continue to raise cash pretty significantly, or it'll find some kind of support in the near term and come up and retest the support zone here, which will either provide resistance and it'll drop back down here in the red arrow, or it will essentially become a fake break and just continue to run up and break out, and then it's a very, very positive sign. So these are the scenarios we're watching very closely. All right, so what clue does the dollar have relative to the stock market? Well, this year it's had quite an importance, very, very good, lots of clues. Essentially, as the S&P has dropped, the dollar has risen. So I've marked each area of, I'd say, importance or a turning point in a vertical blue dotted line, and you can see at each point when the S&P rises, the dollar drops, and when the dollar rises, the S&P drops. So it's been completely non-correlated this year, or reversely correlated. And essentially, what that means is it's going to be very important to watch where the dollar goes. So let's look at a couple more charts. So if we look at the dollar over the course of a year, it seems to be in an overbought zone, right? That doesn't mean that it's at its very top and it's going to drop down immediately, but what it says is that this trajectory that it's on is not sustainable for long. So could it be another couple of trading days? Could it be another week or two? Absolutely, no certainties there. But what it does mean is that it won't stay up at that level or this trajectory for long. And so I would anticipate if it doesn't start to pull over now, then it would. We've got maybe to the point of getting to this upper trend line that would serve as a major resistance and ultimately drop down at that point. But you can see over the past year, each time that we've hit this level, the dollar has dropped. And so again, if the dollar is uncorrelated to the S&P 500, that's good news for the S&P. So again, maybe not today, maybe not tomorrow, but I would say in the next week or two. Now we are in September, and September is historically one of the worst months of the year. So it all makes sense, but I would say, in the not too distant future, we're probably going to get a little bit of breathing room on the S&P 500. So it'll be important to see if we can build off of that potential bounce that we feel like could happen. So if we look at the dollar on a much longer term time frame over the course of 10 years, you can see that it definitely trends, right? So once we hit that upper trend channel, it definitely drops back down. So we're right there. So this is good news for the S&P if the dollar drops. And so we're watching this very, very closely. Now, we've got inflation. We've got a lot of things at play right now that could change this scenario. So it's going to be very important to monitor where the dollar goes. But I think there's a lot of clues that the dollar holds relative to the stock market. So as you can see that there's a number of clues that the dollar gives relative to the direction of the stock market. So this is a metric that we're going to continue to watch closely. And, but if you have any questions, give me a shout, and I'll see you on the next Markets in 5.